All right, this week was a terrible week for me. Not only dollar-wise, it was a terrible week, but it shattered my confidence. I feel like I've said this more than once, but it definitely shattered my confidence because now I don't know what to do next week. I don't know which strategy to take because I really lost a lot this week. I lost about 1,300 net US. So that hurts, especially that it brought me back. I was up since July, up about 3,300 net US. And now it brought me down to 1,800. So it kind of hurts to see 3 or 4 weeks of gains erased in 1 week. So it makes me sometimes doubt the strategy. And my biggest loss was a CarMax earnings trade. I opened a put spread at 195 for 80 cents. CarMax was trading at 106, 107. After earnings, it went to 95. So it completely breached my put spread. My plan was to sell a call spread against it to mitigate the max loss, but there was nothing left in premiums on the call spread. I was only able to get 50 cents from the call spread, as you could see here. So this one generated a big loss for me here. So the call spread obviously ended up being profitable. I closed it today. The put spread generated a loss of $800 US. So that's an earnings trade that went bad. And I'm looking back, where did I go wrong? I don't think my strategy was to do put spreads on earnings out of the money. Maybe one thing I didn't do right is it didn't have enough premium, so I went 1 or 2 strikes closer to the current market price. But even if I had gone at the 98 strike, this trade would have still been a big loser. Maybe not as much, maybe probably $700, maybe $650 loser, but it would have been a big loser anyways. So I'm not too sure what I did wrong. Maybe never play earnings again, but I've had a lot of good earning trades. Even I had Nike this week, as you could see here, 111, 106, collected 83, closed it the next day for 2 cents. I mean, you can't ignore these easy wins. Sadly, I was only able to get 1 contract filled, so it was only $68 profit. So it's kind of annoying. A trade that goes bad, $800 loss. A trade that goes well, $68 profit. But so I've got a lot of good earning trades, so I don't know if I want to completely stop earnings. But after seeing that $800 loss on CarMax that I couldn't control, just because the stock opened way below and there was nothing on the call premium on the call side to mitigate with, I only collected 50 cents. So that didn't help. I had a Tesla put spread that I opened last Friday because of battery day. The premiums were so high. I was able to go 80 points away from the current market price. When I opened this, I collected $1. And then Tesla messed up and went below my 370 strike. So I ended up selling a call spread at 370, 375, collected $1.78 when Tesla was trading at around 358. I saw Tesla below my short strike of 370. I couldn't not do anything. I had to take action because I don't know if it keeps going down or not. I'm not good at predicting direction, so I had to take action. It's below my short put by a lot, so I had to sell a call spread to collect some premiums to reduce my max loss. And right now Tesla's above 400, so now this call spread is going to be a loser. I didn't close it yet, but I put $5 because that's the max price that I can pay for this. The put spread ended up closing for 21 cents, so that's a profit of 142. But I'm going to lose on the call spread that was supposed to be mitigating my put spread that got completely breached. So I'm going to lose about 660 on that one. This is a good trade on Carvana when it jumped up 30% just because they said they will have good earnings. It jumped up. I sold naked calls at 300 strike. I only did 2 contracts. I wish I did more. For 54 cents. I closed it the same day for 25 cents. Wish I did more, and actually I could have held it and let it expire worthless, but whatever, $45 profit on that one. Nvidia was a put spread when the market dropped a little bit, collected 90 cents, closed it for 45 cents, I think the same day. So that's a $74 profit. Nike was a put spread, earnings trade was profitable. Amazon, and I think this was a mistake from these were put spreads on I think Wednesday when the market dropped hard. I did put spreads on Amazon and Nvidia, collected $2 on Amazon, collected 90 cents on Nvidia. And then the next day, I didn't feel comfortable. I didn't trust the market. I got scared. So I decided to close it right away for break even. If I had waited exactly 5 minutes later, I would have been able to close this for more than 50% profit. So I ended up losing on commissions only because I closed it for break even. But these trades should have been profitable. This should have been an extra $200 profit right here because I would have most likely closed it for 50% profit. So this I feel is my mistake for getting scared. The CarMax is just part of the strategy, the earning strategy that I play. It didn't go as planned because I thought I could collect premiums from the call side, so that was a little bit of a surprise. But these two trades here that I could have closed for winners, this is definitely my fault. Tesla, I don't think is my fault because I had to take action. I see it got breached. I have to take action. Maybe I had the chance to close it before Tesla dropped. I had a chance to close it for maybe a 30-cent profit, and I didn't because it wasn't 50% yet. I collected $1. I had a chance to close it for 70 cents. I wanted to close it for 50 cents. So I didn't close it, and then it ended up dropping, which I had to take action, and I sold a call spread against it. But I did, when it did drop to 358, I sold another put spread at a 340 strike, collected 90 cents, and I closed it the same day, maybe like 30 minutes later. I closed it for 45 cents. So that was a profitable trade, which I placed when Tesla dropped completely. So $74 net profit there. So that helps mitigate the call spread that I'm going to lose on. Now Zoom, I sold a 464.55 put spread when Zoom dropped hard yesterday, and it came very close. It actually dropped below 460. I didn't do anything, and then it went back up to 468. I didn't feel comfortable holding it. I opened it for 90 cents, ended up closing it for $1.63 just because I didn't like how close it was. I didn't trust it. I didn't want to take another $400 loss on this trade if it did end up breaching it would have been another Tesla trade. So I decided to close it for a small loss, $161 profit. Today Zoom's at 490 or even 500, so this would have been a profitable trade if I had just held on to it. So Amazon, Nvidia, and Zoom, I chickened out and they would have been profitable. And Costco was an earnings trade at 335. Short strike, $1.06. Ended up closing it for break even, 98 cents, but exactly 30 seconds later, I could have closed it for 60 cents. What happened is I put an order at the open and it got filled right away at the open. What I should have done is just waited to see what the options were trading at, and I saw that it was trading between 30 and 70 cents. So I could have closed it easily for 60 cents, which would have been a decent profit. So for example, so right now total loss is about 1341. Now let's just see if I would have changed a few things if I didn't chicken out on some of these trades. So Carvana, I think I would have done the same thing. Nvidia was good. Nike, CarMax, I had no choice. Amazon, this I should have closed for $1. Nvidia, I should have closed for 45 cents. Tesla, this was fine. This is a loser. I can't do anything about it. Zoom, I should have closed for 45 cents. Costco, I should have closed for 60 cents. So let's see what I could have gotten. I still would have had a loss of about 839. So still would have been a losing week, but just much less. Now this rocket is a naked put that I'm rolling. So this week it's a loss, but I rolled it to next week for 317. Collected a net credit of 33 cents. So I don't know if I should include this because the trade is still open, and I just keep rolling the put. This is just something that I'm testing out, rolling naked puts forever for a credit until the stock eventually recovers. So we could not include this, but I mean, for this week it is on paper a loss, but it's still open. So I don't know if I want to confirm it as loss, but still. So for this week, 1,300 loss and a shattered confidence. I don't even know if I want to keep trading anymore or if I want to keep selling put spreads or call spreads. I really don't know. Maybe I should just stick to naked calls, far out of the money naked calls like Carvana, but that was an opportunity that came by luck. That means for me to generate income every week, I have to wait for an opportunity. It might not always happen. So yeah, I really don't know what to continue doing with options. I know selling premiums work, but I mean, this really hurts. $1,300 loss. And I wish I could pinpoint my mistakes, but the only mistake I see is not staying in with the trades that would have ended up winners. But the losers, I don't think I did anything wrong with the losers. So I'm going to have to take a little bit of a break just to review my trades, review my strategy. I mean, I stopped the SPY put spreads because last time I lost $800 on it right over here. And now I want to stick to earnings, but now I lost $800 from CarMax, which was an earnings trade. So I feel like I don't trust anything anymore. So I have to take a break and just review my trades. which approach which approach I want to take. I know I won't be going into dividend investing 100% because although it's I think would match more my personality because it's super passive, but it's something that you can't control because at some point stocks will end up, companies can cut their dividends or suspend their dividends. So that element of it's not really in your control, that bothers me as well. And to mitigate that, you really have to diversify so that even if a company does cut their dividends, at least it doesn't affect your whole portfolio. And all that, and you're just getting 4 or 5% per year. I really want to stick with selling premiums, but I need to find a more consistent approach. I don't think I can handle a $1,300 loss, or at least I can't handle a loss that wipes out. Let's see how many weeks does it wipe out? It wipes out about, that's scary. Keep going. Okay. So it wipes out until August 19. So about a month, almost a month. So almost 3 weeks of gains. Almost 3 weeks of gains have been wiped out from 1 week of trading. All right, so these were my trades this week. Let me know what you think in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.